All right, guys, welcome back to the channel. Listen, this seems like a no-brainer, but let's just plow it out there anyway, and then some more information at the end. But when I tell people don't save money, don't save cash, don't save, it's counterintuitive because it's not how you were raised, but it's true now. With the money printing that's going on, it's reducing your purchasing power. Keeping your money in money is just not the way to go. So, I mean, I can explain that to somebody. Purchasing power is going down. um, but the number one question is, well, if I don't keep cash in cash, if I don't have a savings account, where do I put it? I mean, how do you keep cash in cash? That's not cash. I mean, if I'm trying to avoid inflation and the money printing, what do? So I thought I'd throw together just a quickie video of different places you can actually put it. I did a video on liquidity, how to convert assets back into cash. I did that. If you want to go to the channel, you can see that. It just says, what is liquidity? But here's a few ideas, and by all means, not a complete list, of where to put your extra money. Now, first, you do need some cash. You want to have about 3 months of living. If you have a mortgage, you have a car payment, you have maybe credit cards. I don't know. I don't know what you have. I'm not you. Whatever it is, you should have at least 3 months of that set aside in cash. And it wouldn't be a bad idea to have a couple of grand more set aside to cover like a car repair or something like that. And if you're lucky enough to have 3 months, 6 months, 12 months of bills, money, cash put away, and a couple of grand for maybe an emergency that doesn't involve that, that's cool. And if you have more cash than that, why are you listening to me? I have no idea. But keep that handy because the crash is coming. And like Warren Buffett says, when there's blood in the streets, that's when wealth is made. And there is going to be a stock market crash. It's inevitable. It always happens. Everything crashes. It's going to be a real estate bubble. It's going to blow up. It always happens. If you look at the debt to GDP in the United States alone, we're at 100%. We're borderline default. If we weren't the world's world currency and just printing money like we can, everybody else is suffering. The reason we're not is we're printing the money. All right, listen, that's not what this video is about. I'll shut up about that. Okay, where can you put your money? You got 3 months to 6 months to 12 months set aside. Blah blah blah. You get some emergency cash. You get a couple of grand in a safe under your bed or something, or in your closet in your bathroom. Oop, I just told you where I put mine. All right. Now, where can you put your money? Okay, first of all, you can buy stocks. So you're buying pieces of paper that say you own a certain percentage of said company, or you could buy a ETF or S&P 500, which rotates companies, the top 500. Hold on a second. Sorry about that. I had to do something. That's one way. Now, keep in mind, inflation, they're telling you, is 2 to 3%. The average return on stocks average is about 10%. So you're making, 6, 7, 8%. You're increasing your wealth. That's one way to go. Now, we're probably on the verge of a stock market crash. Not financial advice. I'm just a voice on YouTube. I'm not telling you what to do. I can tell you what I did. I pulled almost all my stocks out. There's only a couple of companies that I think are going to survive this plummet. But that's one way to go. Let me grab a pen so I'm not repeating myself here. Okay. There's something else you may not know. It's TIPS. It's Treasury Inflation Protection Security. That's a government bond that is, I'm going to say pegged. It's not really pegged, but it increases with inflation. So if you can buy it like $100 worth. I mean, you don't have to be super rich. If you want to put $1,000, it'll say $1,000. Put $1,000 in there in 10 years. That might be worth, the bond might be paying you back $1,500. It looks like you made money. You really didn't. What it's doing is it's increasing its value compared to the published inflation rate. Here's my problem with TIPS. That's not to, well, first of all, that's not to increase your wealth. That is only to maintain your wealth. Keep $100 buying power over the years. And, it's 1 year, 5 years, 10 years. It depends what bond you buy and blah, blah, blah. The problem I have with that is they're going to go by the Federal Reserve's published inflation rate. And I'll tell you right now, that's bullshit. They're going to tell you it's 2 to 3%. Right now, they're saying it's between 2 and 3%. In reality, depending on what you measure, inflation is relative. It's probably closer to 10, 12, 15%. Houses have gone up 10%. Lumber has gone up a ridiculous amount of money. I import a lot of products from China. And the cost of containers have gone from $800 for 20 feet to $4,000. It's, so inflation is relative. So, I mean, if you want to trust the numbers they give you, they will, you can buy a treasury bond and they're going to stick to it. What they publish inflation to be, 2 to 3%, they're going to increase your bond by that. And they're telling you they're protecting your money that way. Yeah, you could do that. I mean, at least you're not losing. I mean, if you put $100 in the bank, your buying power would be $80, maybe a year from now. And if you put your money into a Treasury inflation protection security or a TIPS, your $100 is maybe $120. You see what I mean by that? Okay, I hope we got that. Okay, someplace else you can put it. Gold, silver, precious metals. Not a bad idea. Usually gold is considered an insurance policy against inflation. And once again, you're really not there to make money. Hopefully you will, but you don't know. I mean, I actually had a friend of mine a couple of years ago told me to get into silver when it was like $11 an ounce. And I'm glad I listened to him. Because what is it right now? I don't know, 20 something bucks an ounce, $27 or whatever it is. I actually don't know. I haven't looked, but I got a bunch of it. So my money didn't lose money. I maybe didn't make a fortune, but I didn't lose money. And that's the whole gig here. It's the whole thing about not saving cash. Cash is a guaranteed loss. Guaranteed. It's built into the system. It's designed that way.
Cash is trash, okay? Cash is trash, okay?
So you can go into gold, silver, precious metals, do your own research. It's a way to go. Another place to put your money. You can invest in real estate. Now, I don't mean go buy a house, and especially right now, the housing market is crazy, and that is so going to burst. But you want to invest for cash flow. So you're talking real estate, investment real estate. House you're going to rent out, maybe an apartment. We have like 4-unit apartment buildings. I have an LLC, so you really can't get a decent loan for anything under 7 units, I think it is. But that's another place to put your money. You could park it there. I mean, if you have a few $100,000 hanging around and you don't want to watch it melt like an ice cube, buy one of them. You got cash flow. You have the real estate market may burst, but it's eventually going to come back up. So you'll have that property, and you have physical. That's a physical asset. Stocks are not a physical asset, and tips are not a physical. You can't touch it, feel it. You know what I mean. Real estate, not a bad way to go. If you don't have the money for stocks, or you don't trust the stock market, and you want something more tangible, something you can get your hands around, start a business. You could start a business, or you could invest into a physical business that's not buying stocks. I mean, like, hey, you guys own a restaurant, I'm going to buy half of it. Or, you want to sell me half of it. Or you can start a business. I mean, you can start small too, man. I mean, anybody with an iPhone can start an eBay business or an Amazon business. Really easy stuff. You'd be surprised how much money you can make at that. And you're controlling your income. And that's just another place you could put your money. Don't leave it in cash. How about art? Now, art is tricky. I invest in art. My wife and I do. We have certain artists we like quite a bit. Art tends to go up about 20% a year, depending on what you bought, where you bought it, how much you spent for it. Liquidity is You got to pay attention to that. It may be going up 20% a year, but when you go to sell it, like our banks, I could sell that quickly. But I'm going to have to go through an auction house. I'm going to have to pay the auction fees, and then there's going to be transaction fees, and there's going to be fees, and there's going to be fees, and there's going to be fees. If you don't know anything about art, don't do it. I mean, just, do some research first, then do it. But I mean, do your research first. Another place to put it is one of my number one is crypto. And I don't invest in cryptocurrencies because there's no such thing. Crypto is not a currency. It's a digital asset. And I used to invest in the altcoins and, Ethereum, ADA. I used to have a bunch of that. I consolidated everything into, I'm a Bitcoin guy now. Bitcoin is like gold 2.0, where you don't have issues like 10 to 15% inflation. You don't have issues where they're just going to print more money and devaluing what I own as an asset. My dollar is now worth 80 cents purchasing power. You don't have that. It's a set supply every 10 minutes. There can only ever be 21 million. Nobody can mess with it. They can't come and take it. Now, keep in mind, your stocks, you don't know what the CEO of that company is going to do. The Treasury inflation, I still think that's kind of a joke because they're only going to give you the published inflation, which is 2 to 3%, is what they're saying it is. And it's really like crap, almost 10 times that. Real estate, not a bad way to go. I like real estate. The trouble with real estate is they can tax you out of it. They can start raising taxes and totally reduce your income, or you could even lose money on that just with taxes alone. Gold and silver, I don't know if you read the financial headlines, but gold's been manipulated, so is silver. Was it JP Morgan just paid like almost $500 million or something in fines for manipulating the market? I'm not going to get into that on this video, but that is very, very possible to do. Your own business, I like that idea a lot. I have several businesses, and I certainly would encourage everybody to do that, even as just a side gig, just to make sure there's always cash flow. It's pretty simple stuff to do. You can Google, you can YouTube passive income. You got to pay attention. But with Bitcoin, nobody can touch it. It's volatile right now, and I don't care. I'm still buying it. Matter of fact, when I finish this video, I'm buying more. I was going to do it before I started this video, but I'm watching it and I'm hoping it goes down a couple of grand because it's all over the place, but I know where it's going long term. But anyway, cash is a guaranteed loss. That's the point of this video, basically. Cash is a guaranteed loss. I want all boats to rise when the tide comes in, my friends. So do some diligent research. There's some great channels on YouTube. There's some shit too, but there's some great channels on YouTube that really help you with this. I hope I gave you some ideas of where to put some of your cash. And you don't have to be debt free 100%. Like I hate when these channels tell you, first thing you do is going to be completely debt free. Secondly, put away 3 years worth of expenses. Thirdly, that's not practical. You invest money or you protect money. But money itself is a melting ice cube at 10 to 15% a year. That's your purchasing power going down the toilet. Put it in something that's going to maintain or increase in value. That was the point. All right, my friends. Hey, listen, thanks. Subscribe if you like, or give me a thumbs up anyway. I mean, we'll see if I can't get YouTube to do something with these videos. And God bless. Pay attention.